What's going on, guys? It's your boy Tyler bringing you fundamental news on a fundamental basis. Today's article is brought to you by Routers. Dollar gains as debt deal hopes rekindle hawkish Fed bets. The dollar firmed to a near 6-month peak against the yen on Friday and pushed the euro to an even 7-week low as optimism over debt ceiling talks in Washington raised expectations US interest rates will stay higher for longer. Democratic negotiators told President Joe Biden on Friday that they are making steady progress in talks with Republicans aimed at avoiding a U.S. default, just days after Biden and top U.S. congressional Republican Kevin McCarthy underscored their determination to strike a deal soon to raise the government's $31.4 trillion debt ceiling. Damn, 31 trillion, guys. Do you understand that? That's more money than ever, guys. They're gonna print, and you wanna be part of it. You know what I mean? You don't wanna go against the system. As much as I also don't agree with everything that capitalism stands for, and its foundation, its basis, how it started with the slave tradery and stuff. But guys, now they're printing money every day, literally every day now more than ever. So that eased fears of an unprecedented and economically catastrophic default, leading markets to revise their expectations of where US interest rates could go. At the same time, data pointing to a still tight labor market, with the number of Americans filing new claims for unemployment benefits falling more than expected last week, also raised expectations that the Federal Reserve could deliver another rate hike next month in a bid to tame inflation. The dollar stayed elevated in Asia trade on Friday and last bought at 183.47 yen, having risen to a near 6-month high of 183.75. When in the previous session, the greenback was eyeing a weekly gain of about 2% against the Japanese currency, its largest since February. The euro fell to a more than 7-week low of $1.0760 pennies, while the US dollar index rose 0.07% to 103.57, flirting with Thursday's 2-month high of 103.63. The index was headed for a second straight weekly gain of nearly 0.9%. Optimism about the debt ceiling talks has contributed to a repricing for the Fed. The fact that a deal would remove a big weight on the economy, effectively said Ray Attrill, head of FX strategy at National Australia Bank. It does remove one obstacle to the Fed continuing to raise interest rates. The Fed policymakers where was I? Two Fed policymakers had said on Thursday that US inflation does not look like it is cooling fast enough to allow the Fed to pause its tightening campaign. Money markets are now pricing in a 33% chance that the Fed could raise interest rates by another 25 basis points next month, compared with just a 10% chance a week ago. According to CME Fed Watch tool, traders have also paired expectations on the scale of rate cuts expected later this year, with rates seen just above 4.6 by December. US Treasury yields have climbed on the back of the hawkish Fed repricing, and amid a pickup in risk sentiment, yields rise when bond prices fall. The 2-year Treasury yield, which typically moves in step with interest rate expectations, last stood at 4.2510%, while the benchmark 10-year yield was last at 3.6402%. Among other currencies, sterling fell 0.1% to $1.2396. The Aussie edged 0.2% higher at 0.6635 pennies, having slid on Thursday against a stronger dollar and on data showing that Australia's employment unexpectedly dipped in April. In Asia, Japan's core consumer inflation stayed well above the central bank's 2% target in April, and a key index, stripping away the effects of fuel hit a fresh decade high, keeping alive expectations that the central bank could tweak its massive stimulus this year. In China, the yuan extended its recent slide, with both the onshore and offshore yuan at their lowest levels since last December amid total strength and worries about China's sputtering economic recovery. Yuan softness started after China activity data disappointed, said Christopher Wong, a currency strategist at OCBC. The depreciation gathered traction following the breach of $7 or 7 yuans per dollar, and there appears little signs of pushback from policymakers on the rapid pace of decline. So basically, guys, what they're saying is if this debt ceiling happens, it will actually be good for stocks because it means big investors, your pension funds, and so they can borrow money and invest into stocks, high yielding stocks. But also, what they also saying is that the dollar seems to be strong as well. Is another thing that I'm hearing.